I went online to discover somebody who had addressed this very narrowly and specifically, and I kept running again and again into a large-scale, very impassioned, almost sort of white-hot treatise online about Bitcoin as money from an Austrian point of view. And the author is Peter Surda. So we had had several Skype discussions in the meantime, and I knew that it would not be possible to put on a conference on Bitcoin without having his insight and enjoying the benefit of his thinking. He lives in Vienna, so you can imagine for a conference that had absolutely no resources whatsoever going into it. It was a little bit of a speculation to bring an intellectual from Vienna, Austria, to be with us today, but we went out there just because I knew that in some ways, you know, this is a very valuable commodity right here. So I'm very pleased to introduce Peter Surda, who's going to talk about Bitcoin as sound money.
Thank you, Jeff, for the introduction. Okay, so my name is Peter Surda. You can see here my email address, my Twitter, my website, and I actually think of myself as a guy who complains on the internet and suddenly everybody thinks that I'm an expert. Jeff was actually the one who picked the title of my talk, and then a bit later Arlene emailed me and asked me, is that okay, can we keep the title? And because I'm lazy, I said like, yeah, sure, just keep it. But unfortunately, as it usually does, it backfired, and I had to do some actual research instead of just putting something together. I hope it won't be too much boring. I try to present something new as well. So let's see. Okay. So what does the Austrian school say about money? What is it? Now, I was a bit confused because I found a total of 5 different definitions of money. You can see here, the first one is generally accepted medium of exchange, most liquid good, something which is only demanded for its monetary value. That was one of the arguments brought by Ludwig von Mises. Salerno uses the condition as a final means of payment, of differentiating between money and some forms of financial instruments that are not money. And also often it is implied that money is a unit of account. So it turns out that actually what we mean by money depends on the context in which we use it. But even though we can't agree on the overall what it actually is, it looks like it doesn't prevent us from using it. Like if you ask everybody, do you have money, are you using money, they'll say, yeah, sure. So even though we are a bit confused about it, that we still use it. And Nassim Taleb wrote a fascinating book called Anti-Fragile, and there he complains about people who about theorists who argue that if you cannot explain something or put it into some sort of coherent definition and everything, that we can just ignore it, and that's simply not true. We obviously use money, and even all other economic schools, they disagree on what sound money should be and whatnot, and we still use it. Yeah. Is Bitcoin money? I get this a lot. It looks like the confusion about what is money also applies to Bitcoin, because we don't agree even on what Bitcoin is. There are different ways of seeing Bitcoin users and Bitcoin owners and what it means for them. But we can just say that probably all of these are kind of true in certain context. But I would say that Bitcoin isn't really money yet, because if you look back at those conditions that were mentioned here, it doesn't fit most of them, but on the other hand, if you think about them, a lot of these conditions are quantitative rather than qualitative, so it depends on who's looking at it and what the relevant context is. But Jeff just mentioned about the origin of money or origin of Bitcoin. This has been a hotly debated topic, and I can't actually understand why, because it's obvious. The Austrian school argues that money must emerge through trading. It cannot emerge by someone like a king saying, this is money, and magically people will start using it. And but there is an objection, like how come states can make fiat money if you can just say it? Stefan Kinsella addressed this a little bit in his lecture just now, but what I'll show another take on this. There's a huge logistical issue with how to create money if you're the state. You need to either do the recoinage, you need to pass laws and make sure that people adhere to them. And when the ECB switched Europe to the euro about 10 years ago, they printed really a lot of money and made sure that the banks are stacked up and that it doesn't collapse when people are supposed to leave their old Deutschmarks or French francs and start using euros. So it was thought that you can kind of influence this, but you need to spend a huge amount of resources, and basically, unless you're the state who can then benefit from all the advantages to itself, you can't really do that. But it turns out that with Bitcoin, it did emerge through trading, and I addressed this a little bit in my master's thesis. I actually wrote a blog post about 2 weeks ago, which tries to address this in a bit more specific way and explains the individual milestones that Bitcoin has reached on its way to becoming not money yet, but a medium of exchange. I won't have the time to elaborate on that in all detail now, but you can read it on my blog or just ask me afterwards. And what Bitcoin actually shows is that even though it did emerge through trading, but the amount of kind of initial interest in it to go over to the thresholds is smaller than economists previously thought. And because there is a discrepancy, like they have all these ideas like you need to do a really lot and force people to use it and so on, and Bitcoin just, it looks like on the first look just pops up and it's there. So how did the economists, in particular Austrians, approach this so far? Well, at the beginning, they are just confused and they don't know what's happening. Then the next logical step is that not all of them, but this is the typical procedure. They deny that it exists or that it works. And once they cannot deny it anymore, then they switch and they start to explaining why it cannot work, which is also kind of strange. So basically my summary is that money can only emerge through market forces. The state can influence that to a certain extent, but it cannot in principle get around this obstacle that it needs to get people to trade with it. And so it is with Bitcoin. So now we know a little bit more about money, even though it's confusing. So maybe I should put a different topic here, and what is sound money? And it's difficult to imagine like sound money, what could it be? So maybe I'll start with what is not sound money. And I came around this research recently, and basically there was a paper published which claims that there is a link between inflation and laughter at the Federal Reserve meetings. And the researchers think that the laughter is a mechanism for those involved in the Federal Open Market Committee to cope with stress. Now, I don't know how about you, but I don't think that this is sound money. It's more maybe like hysterical money. I don't know. Now, we spoke about the origin of money, but I actually came to the conclusion that the origin doesn't matter. And even though a lot of economists are kind of obsessed with this idea that Bitcoin doesn't have the right origin, that's actually, even if it was kind of true, it's also not really relevant, because once you have the network effect, once money works, then it can continue working. And even some of the Austrians like Rothbard and Mises, they do have in their books sentences which explain basically what I just said, that once it works, it can continue working. So even if there was something wrong with the origin, it doesn't prevent it from being money, and maybe even not sound money. What, however, is an important aspect with sound money is if you can have a competition in production of money, what happens is then people produce and produce and produce until the market price drops and the production costs rise at about the same level. And that's basically, that creates an equilibrium, that you can create hypothetically money, but if you go over the marginal cost, then you'll end up paying more for the production than you'll get when you sell it. So this is one of the reasons why, in order to have to be able to print money as much as you want, is to create a monopoly, or at least legal restrictions to the business of producing money. There is also the reason why it might be beneficial for somebody to have a privilege is the so-called Cantillon effect, which means that the people who produce the money first, they have the purchasing power and they can spend it even though the market price of the money is higher than their costs. And as the money then continues to trickle through the economy, it impacts some people more than others. Those that receive it earlier, they have more purchasing power, and those that receive it late, they have less purchasing power. Also, the Austrians, or most of them at least, argue that there is something called the Austrian business cycle theory, which means that if money is increased through credit and put as is lent to investment projects, this creates the business cycle. But if you think about it, this all depends on the privilege of producing money, because if the costs are the same as the market price, then there's no reason why new money should go, why the people who invest into projects should be the one profiting from the increased purchasing power. And also, one of the other reasons why Austrians prefer gold is not actually because of its origin, but because the fact that if there's a competition in production, that you cannot have someone taking it over and drawing the purchasing power to itself. Here is a quote by Ludwig von Mises. Actually, you can find it in most of the books probably that deal with money by many Austrians that say something similar. The gold standard has one tremendous virtue. The quantity of the money supply under the gold standard is independent of the policies of governments and political parties. This is its advantage. It is a form of protection against spendthrift governments. So we can see here that the core issue here isn't what is money, but whether there are legal restrictions to its production. With gold, it would be kind of difficult logistically to take over all the mines and to make sure that nobody else can mine gold. This creates huge costs. So that's the reason why fiat money is introduced. And then you just pass laws against counterfeiting, which is just copying, which we know copying is not a violation of property rights, and that allows the government to reap the benefits from the production of money. And once you abolish this privilege, then the production will equilibrate at the level where the marginal production costs are the same as the market price. Now, this has actually happened with paper money as well. This is not specific to gold, because gold is created by market and paper is not. In Somalia, there hasn't really been a functional government for over 20 years, and what happened was that because counterfeiting laws cannot be enforced, private individuals started producing their own paper money, which were basically just copies of the old government money. And it got produced to the extent where the production costs are about the same as the purchasing power. And this created an equilibrium, a stable money supply. And this has existed like for over 10 years, and it still seems to be working. In Kurdistan, there was a similar situation where around the time when there was the invasion of Iraq, there was a monetary reform in Iraq, and but in the north of Iraq and Kurdistan, they refused to accept the new money, and they kept continue to use the old paper money, even though it wasn't legal tender anymore. It didn't last very long, because then there was another reform and so on, but in principle we can see that it doesn't matter what the origin is, as long as there's free entry, or in this case of Kurdistan, nobody can produce money. That's also a possible equilibrium state. But sound money is only a part of the whole thing. There is a whole stuff built on top of money, which is called the financial system. And something like 97% of our money that we use in the US, for example, is digital. It's not, it's created by commercial banks. It's not the paper and the coins that are used. Again, here we have the same issue. Once you have free entry into the provision of financial services, you don't have like privileged companies, let's call them banks, that can reap the benefits of increasing the money production. So similarly as when the production of base money, if you try to compete, you're a counterfeiter. If you try to compete here with the financial sector, it's called operating a bank without a license. But merely because there's a free entry into provision of services, that's not necessarily enough, because there is still the so-called principal-agent problem. What this means is that the intermediary, the bank, its interests are not necessarily aligned with your interests as a depositor or a customer of the bank. And furthermore, it makes the agent, i.e. the bank, susceptible to political pressure. And it might, due to this pressure, act against your own interests. And Brian Kaplan just wrote recently an article about how the ability to put pressure onto intermediaries is a way how government can decrease its operational costs. So free entry into competition is not the only condition for a sound financial system. Also, the end user needs to have full control over their money, and the property rights in money needs to be enforced. We had wonderful talks about this earlier today. Bitcoiners call this full control freedom of transactions, that I can do, it's my money, I can do with it whatever I want, and no intermediary can tell me what I cannot do with it. Now here I have a brief overview of the 4 branches that I was able to identify of the Austrian school and their ideas about ideal sound money system. The most popular one is the so-called gold standard branch. For example, Murray Rothbard and Walter Block are some of the most vocal proponents. It argues that the sound money arises when you have an inelastic monetary base, like gold. And on top of that, the financial system is a 100% reserve banking, because then banks cannot increase the money supply, they're restricted by the reserves. Another one, which is also popular, is the so-called free banking branch. Major proponents are Lawrence White and George Selgin. They also argue for an inelastic base that's independent of political, from monetary policy. But on top of that, you have fractional reserve banking. Now, they argue that this is fractional reserve banking is beneficial. I'm not going to argue here which of those is the correct one. I just wanted to outlay all the branches here. Then we also have the so-called New Austrian School, which major proponent is Antal Fekete. They also argue for an inelastic base like gold. However, the credit would not be issued by banks, but by non-banks, like Tür had the presentation earlier today about real bills. So this is basically something like that. And finally, there's the very radical proposition of Friedrich Hayek, which I'll label private fiat, which basically means that there's no monetary base and just all money is financial instruments issued by banks. My point here isn't to explain which of those categories Bitcoin fits into, however, is to point out that how Bitcoin can contribute here in general. So far, the Austrians, all of them have argued that the only way to achieve sound money is to have a legal reform. But the legal reform, of course, would have to happen exactly in the conditions that are specified in the particular branch. Like the gold standard branch would require a legal reform that enforces 100% deposit banking. If there's a different legal reform, that the sound money is unachievable. And not only is there a problem about how to achieve this reform as such, but also there are open questions about what specifically the reform should contain. Even Murray Rothbard, one of the most vocal proponents of full reserve banking, he made about 2 or 3 different proposals about how exactly the reform should occur. What Bitcoins bring into this debate about sound money is that it kills 3 birds with 1 stone. So far, those legal reforms about the monetary base and banking were seen as 2 separate steps. Well, they need to be taken together in order to have sound money system, but they solve 2 different problems. However, independently of which of those 4 you believe, you would need to reform the monetary base, enable competition to a large extent, or make dollar convertible into gold again. Furthermore, you would need to have reformed the financial sector. And what Bitcoin shows is that this is actually can be achieved in 1 step, because Bitcoin is not only monetary base, but it's also a financial system, in particular when you consider all the smart contracts and multi-key signatures and all those complicated things. So it's actually a better financial system because it's more efficient. It's not that it suits one of those particular branches better necessarily, but it allows a more efficient system, and that brings me to the next issue here, that because it's more efficient, there is no need for legal reform per se, because this can be the switch can be achieved simply by people using a more efficient system voluntarily, even though it's not actually, I wouldn't say allowed, but there are obstacles to such a switch. But the paradoxical situation with Bitcoin is that actually a lot of the legislation eliminates competition for Bitcoin. There was a system called e-gold, which is a digital currency backed by gold. It was shut down, then it was accused of money laundering. Then gold money, it wasn't shut down, but they had to disable the ability to send money to a different gold money user. So it was neutered. And this is a paradox, because even though the government tries to restrict competition, it actually benefits Bitcoin to a certain extent. And it also might eventually backfire, because as you try to put more force on the financial system and to solve the problems, people might just spontaneously move to Bitcoin because they see that their own interests are not being treated by the financial sector. Yep, that's about it. So my summary is that what Bitcoin brings into the play is the three things. You can do two reforms in one, and you don't actually need to do a legal reform. Thank you.
Questions? And we're going to go right into our next panel following some Q&A.
When did gold money get that restriction on it?
That was in January 2012, I believe. If you're a resident of Jersey, which is like 1,000 people or something, you can still do that, but that's about it.
Could you explain a little bit more about how Ripple and open transactions can help it?
I had to skip some stuff because it was too much. Basically, even if Bitcoin itself isn't able to provide all the services that you might expect from a financial system, there are purely digital services that can be built on top of Bitcoin, for example, open transactions on Ripple, and they can fill in those gaps that are not directly possible with Bitcoin, or not feasible.
On that note, do you think that the alternative coins like Litecoin also fill a gap, or are they just competing with Bitcoin?
Okay, the altcoin flame war, I'd rather not get into that. I'll say what I like about altcoins, okay? Maybe that will be a better one. I think they have the ability to experiment on things which probably wouldn't be at the right place with Bitcoin because it's too experimental and might break it. And with Bitcoin breaks, then we have thousands and millions, almost, people complaining that it breaks. So experimentation is a very good place for altcoins. And also there could be, people have told me that there is a possibility how you can create an altcoin that's pegged to a fiat currency. And that will simplify some of the problems that exist in the exchanging between dollars and Bitcoin.
I'm wondering, is it right to think of altcoins as sort of alpha beta system for final release in Bitcoin?
You could say that it's not a full definition, but you can view them as that. Yeah, like testing new stuff and experimenting. That's a very legitimate and the correct place for altcoins.
Can I just ask you to give a one-sentence refutation of the claim that regression theorem proves that Bitcoin can exist?
That's kind of like saying that the human action axiom refutes that Bitcoin can exist. It makes no sense. It's how would I describe it? This is I think it's a pretty simple thing, and I wrote a blog post about it, but a lot of people make up some weird claims and try to somehow form it into something that at the end concludes that Bitcoin will collapse or something. But that's very weird. It doesn't simply stand to a logical interpretation. But on what I would stress, though, that this is, even if we disagree on the theorem, it doesn't matter, as I explained, because once it works, it doesn't matter. If it's right, if it's wrong, Bitcoin exists, and that's the important thing.
You're Austrian by origin, have you channeled Karl Menger can you present to us his reaction to what's going on now?
Well, technically I'm not an Austrian citizen, but I just live there. But I think actually Karl Menger, his book On the Origin of Money, that's one of the most brilliant analyses of how money emerges, and you could argue, there are some people who object, but I think that he was able to foresee how Bitcoin emerges, because it exactly describes the necessary steps.
What about Mises?
What about Mises? Mises, I think his contribution was to emphasize that money can only emerge through market forces. Now with Menger, you can argue that he maybe thought that there might be either hypothetical ways, but Mises, the contribution of Ludwig von Mises was that he attempted to explain it's not logically possible for it to have happened otherwise.
Quick question. We were talking about altcoins a second ago, and I've been wondering this, so I thought this might be a good time to bring it up. But with what people like about Bitcoins, if Bitcoins really do start taking hold in a larger way, and we're talking about a lot today, is we like the technology and what the technology can do for us. The fact that it's called Bitcoin doesn't really matter. It's the fact that we enjoy what the technology can provide. So altcoins like Litecoins, which are essentially basically identical in the code to Bitcoins, aside from certain tweaks and changes in the cryptography, even though there's a cap on the amount of Bitcoins that will be created according to the current protocol, if you have, I mean, you could essentially have hundreds or thousands of alternate coins made that essentially provide the same service. So is there really, I mean, of course it'll be limited by whatever method is made to mine them or create them, but do you see that like limiting the growth of Bitcoin itself?
I don't actually think so. I think this might be a bit controversial, but I think that the altcoins are a bubble caused by the increase of money supply of Bitcoin. But this should not be viewed negatively. I think that there are a lot of, you can not only change technical aspects of Bitcoin to create an altcoin, but you can also change the economic aspects of it. For example, there is Freicoin, which tries to do the demurrage. There is also George Selgin he proposed an altcoin that follows his ideal, which is more like NGDP targeting. But whether they are viable as a medium of exchange, that's an entirely different question. And I think that here the network effect plays a role, that at every stage we'll probably have a small number of dominant ones and a large number of small ones.
Essentially, Bitcoin is just first.
Yeah. It was good enough, and the others are not significantly better to merit a change.
So whenever one comes out and significantly improved, or has significant advantage over Bitcoin, it may then take over.
Yeah. If there's an altcoin that's significantly better, it might overtake Bitcoin, but you also need to remember that some of the changes can be ported back into Bitcoin. So we don't know exactly how it will play, but we know approximately that if that happens, there needs to be something significant for the market structure to change.
But in your opinion, the dominant technology of the day, the first iteration is going to typically dominate over other copycats, if you want to call it copycats.
Like, if I think that Bitcoin will stay for the foreseeable future, is that what you're asking?
Well, no. What you posited earlier was that because it was first, even though there may be others that are very similar, it will still maintain its domination.
Well, they can still maintain their status as liquid goods, but it doesn't mean that it's a competitor for Bitcoin from the point of view of the whole market share. Those are two different things. I actually think that an altcoin can practically sustain itself without any meaningful limits. It's enough if there are enough people believing it. It doesn't need to even be the correct economic foundation on that. Yeah? As long as people believe in it, it works. that the threshold is even lower than I thought when I discovered Bitcoin.
So I have one last question for you. In the case of Bitcoin, one of the things that shocks me most is how we have an act of outrageous entrepreneurship occurring in 2009. And ever since then, we've seen intellectuals sort of chasing this thing, trying to make sense of it. And what I find most shocking about that is that it seems to reverse history, and yet I wonder if it really does. I mean, has that actually, in fact, always been true? Have the intellectuals always been behind the entrepreneurs, or is it the reverse?
This is very complex. I'm not really an expert in this, but I can maybe come back to what I said before, that as long as it works, it doesn't matter whether we understand it or not. I think that if there are actual benefits in Bitcoin, then even people who have objections to some of the aspects, sooner or later they will end up with using Bitcoins whether they like it or not. And they might even forget what or claim that, oh, I forgot what I said about Bitcoin, don't worry about that.